Ripple was literally weeks away from liquidating their entire company just to escape the SEC.
Yeah, completely shutting it down.
Right. I mean, instead of folding, they spent $150 million to fight back in court, and against all odds, they won.
Which is still wild to think about.
It really is. But if they survive the ultimate stress test and, secured that massive legal victory, why is XRP's price currently down 60% from its post-lawsuit peak?
Well, that is the billion-dollar question right now.
Okay, let's unpack this. Today, we're taking a deep dive into the source material surrounding XRP's current market status right now in July 2026.
And we've got some really incredible material today.
We do. We're looking at this fascinating stack of sources ranging from technical on-chain market analysis to some truly startling public confessions from executive leadership.
Yeah, the stuff from the CEO is pretty eye-opening.
Exactly. So our mission today is to figure out exactly how one specific piece of legislation, the Digital Asset Market Clarity Act, or the Clarity Act, serves as the ultimate linchpin for XRP's future.
It's essentially the whole ballgame right now.
Right. And for those of you trying to understand the often confusing intersection of government regulation and cryptocurrency, this deep dive breaks down exactly how legislative gridlock dictates market reality.
Setting a baseline for where XRP actually sits today requires looking at a massive disconnect in the data.
Yeah, because on paper it looks great.
Oh, absolutely. On paper, the fundamental developments over the last year have been objectively historic. I mean, we are seeing major ETF approvals, the core network technology is hitting unprecedented milestones, and institutional infrastructure is fully operational.
But the chart just doesn't reflect any of that.
Exactly. XRP's price is struggling to gain any sustainable traction. And the core reason for that disconnect is that the entire institutional market is basically, well, sitting on its hands.
You're just waiting.
Right. The technology is ready, but the capital is waiting on the structural reality of Washington, D.C. to catch up.
But before we can even begin to understand where XRP is going with this Clarity Act, I feel like we have to look at how incredibly close it came to complete extinction.
Yeah, it was really hanging by a thread there for a minute.
Our sources paint a picture of a company that was on the absolute brink.
Yeah, the context of the 2020 SEC lawsuit is vital to understanding the psychology of the market today. I mean, when the SEC dropped that lawsuit in December 2020, alleging XRP was an unregistered security, the market reaction was just brutal.
It crashed, like over 70%?
73%, yeah, in a matter of weeks. It dropped all the way down to 17 cents. And major U.S. exchanges, including Coinbase, completely delisted the token.
So regular people just couldn't buy it.
Exactly. It was essentially cut off from the American retail public.
And here is a shocking detail that recently came to light from a reveal by Ripple CEO Brad Garlinghouse. According to his statements, Ripple's leadership was mere weeks away from just shutting the company down entirely.
Which would have completely changed the landscape of crypto.
It really would have. I mean, they seriously considered taking their massive XRP reserves, distributing them directly to their equity holders on a pro rata basis, meaning just, cutting up the pie and handing the tokens directly to the shareholders based on how much of the company they own, and then legally dissolving the corporate entity entirely.
Because by legally dissolving the company, they would have removed the central target from the SEC's crosshairs.
Right, like deleting the defendant.
Exactly. The regulator was going after Ripple, the company, arguing that their efforts were what gave XRP its value. If Ripple ceases to exist, the SEC's primary argument loses its central actor.
Wow.
Yeah, it is a drastic, scorched earth legal strategy when facing a regulator with seemingly unlimited taxpayer resources.
It's like getting sued by your landlord, so you just bulldoze the house. The lawsuit technically doesn't have a target anymore, but, well, you have lost everything anyway.
That's a great way to put it.
But instead of taking that route, they chose to fight. And it was an incredibly costly fight. I mean, a 4-year, $150 million legal battle.
They chose to fight, and they largely succeeded in establishing a new legal precedent. In August 2025, they reached a settlement.
Which was a huge deal at the time.
Right. They paid a $125 million civil penalty, which is, it's just a fraction of the $2 billion the SEC initially demanded for institutional sales violations. But the monumental victory was the ruling that programmatic retail sales of XRP on secondary exchanges do not constitute a security.
Wait, let's pause there for a second for anyone who doesn't speak fluent lawyer. What makes a sale programmatic, and why did the judge rule it isn't a security?
Sure, it's a good distinction to make.
Like, are we just talking about regular people clicking buy on a crypto exchange?
That is exactly what it means. A programmatic sale is an automated, blind bid and ask transaction on an exchange. When an everyday investor buys XRP on an exchange, they have no idea who is selling it to them.
So they aren't directly buying from Ripple.
Right. It could be Ripple, or it could be a trader in Tokyo. And because there is no direct signed contract between the buyer and Ripple, the judge ruled that the buyer cannot reasonably expect profits derived specifically from Ripple's managerial efforts.
I see.
Therefore, it doesn't meet the legal definition of an investment contract or, a security.
Okay, so they survived the ultimate stress test. They went toe-to-toe with the SEC and won that vital clarity for retail sales. But here's where I have to push back a little bit.
Go for it.
If they won and they survived this near-death experience and they proved everyday trading is perfectly legal, why is XRP's price currently down 60% from its July 2025 peak of $3.65?
Yeah, it's incredibly frustrating for holders.
I mean, if you were holding XRP right now, this is the part that probably makes you want to pull your hair out. Why did it crash back down?
What's fascinating here is the functional difference between case law and statutory law. A court ruling, which is what Ripple won, is case law.
Okay, meaning it's based on a judge's decision.
Exactly. It acts as a shield, it defends you from immediate prosecution based on past actions, and it sets a precedent. But a shield is not an engine.
That makes sense. It protects you, but it doesn't move you forward.
Right. Institutions, like the massive global banks and payment providers, operate on a completely different risk profile than a retail trader. They don't just want the absence of a lawsuit, they want affirmative, written into law statutory frameworks.
So they need actual laws passed.
They need a rulebook explicitly passed by Congress before they will wire billions of dollars into a new asset class.
They want the rulebook officially printed out by the government, not just a judge saying, well, you didn't break the rules this time.
Exactly. And so the focus has forcefully shifted from Ripple's legal defense in the courtroom to the legislative process in Congress. This brings us to the Digital Asset Market Clarity Act, H.R. 3633.
The Clarity Act?
Yes. This is the specific legislative catalyst that the institutional side of the market is demanding before they act.
And according to our sources, the Clarity Act does exactly what those institutions want. It officially classifies XRP as a digital commodity, putting it clearly under the jurisdiction of the Commodity Futures Trading Commission, the CFTC.
Which is a huge relief for them.
Right. But it also does something else. It creates a unified banking framework for digital assets. Let's unpack the mechanics of that. What is the actual friction right now that stops a major bank from just using XRP today?
Right now, if a financial institution wants to use a digital asset for cross-border payments, they are forced to navigate a patchwork of 50 different state money transmitter laws.
Oh, wow. Every single state.
Every single state in the U.S. has its own specific licensing requirements and capital reserves for handling digital money. I mean, it is an administrative nightmare.
I can imagine.
The Clarity Act effectively preempts that state-level chaos by creating a single unified federal standard for digital asset banking. It merges state and federal guidelines so a bank can operate nationwide under one clear set of rules.
Here's where it gets really interesting. We have this massive paradox, right? The infrastructure to use this technology is already fully built, it's highly efficient, and it's working perfectly.
The tech itself is phenomenal.
Yeah. I mean, the XRP ledger currently settles transactions in 3 to 5 seconds at a cost of roughly 2 fractions of a penny. Tokenized real-world assets, or RWAs, on the XRP chain have already crossed the $3 billion mark.
And they have their own stablecoin now, too.
Right. Ripple has even launched RLUSD to integrate with these systems. The technology is essentially flawless. But the biggest players in global finance are just standing at the front door, looking through the window, waiting for Congress to hand them the keys.
And the capital tied to those keys is what the market is trying to price in right now. I mean, analysts at JP Morgan published a projection stating that anywhere from $4 billion to $8.4 billion in first-year institutional inflows are strictly contingent on the Clarity Act passing.
Wait, $8.4 billion in the first year alone?
Yeah, they view that federal integration as the mandatory trigger. Standard Chartered has also published an $8 price target for XRP, but their analysts explicitly state that the target is conditional on this specific legislation becoming law.
So they are openly waiting for this one bill.
The institutions have done the math, and they have tied their capital deployment directly to a congressional vote.
So If the entire industry desperately wants the Clarity Act and the technology is proven and billions of dollars are waiting to enter the American economy, why is it stalled?
Yeah, that's the frustrating part.
What is actually happening in Washington right now in mid-2026?
Well, we are looking at the mechanical reality of the legislative process colliding with a very, very tight timeline. The bill originally passed the House of Representatives back in July 2025 with bipartisan support.
Okay, so it got through the House.
Right. And just recently, on May 14, 2026, it advanced out of the Senate Banking Committee with a solid 15-9 bipartisan vote.
It cleared the committee, so it's waiting on a full Senate floor vote before the August 2026 congressional recess. But our sources say the odds of passage in this current session are currently estimated at essentially a coin flip, like under 50%.
Yeah, it's a toss-up right now.
What is the actual holdup?
It is a combination of parliamentary math and a really bitter fight over ethics requirements. Mechanically, the Senate requires 60 votes to overcome a filibuster and move a bill to a final vote.
They don't have 60 yet?
No. Republicans generally support the bill, but they need to find roughly 7 Democratic votes to reach that 60-vote threshold.
And on the ethics side, our sources outline exactly why those 7 votes are being withheld. Senate Democrats are demanding strict bans on personal crypto asset holdings for all federal officials.
Which is a pretty massive sticking point.
Right. And this specific demand intensified significantly after recent presidential financial disclosures. Those disclosures reveal that President Donald Trump has earned over $1.4 billion from crypto ventures since the start of his second term.
Which definitely threw gasoline on the fire.
Exactly. So Democrats are refusing to move the Clarity Act forward without attaching and reconciling these specific conflict of interest ethics rules and enhanced anti-money laundering standards.
This raises an important question about market reality versus technological utility. We are watching the financial future and utility of a global, decentralized digital asset, one that is built to move value instantly across the planet, currently suspended entirely by a localized partisan dispute over politician portfolio ethics in Washington, D.C.
Does this mean XRP's market status is completely divorced from its actual technological utility right now?
Pretty much, yeah.
Are we saying the price of this global settlement asset is entirely at the mercy of congressional recess schedules and ethics writers?
Yeah.
Because, if you are an investor looking at the speed of the ledger, none of that actually matters to the price today.
In the short term, the market status is completely divorced from the tech. I mean, the market hates uncertainty more than it hates bad news.
That is so true.
When you have a legislative binary event, it either passes or it doesn't. And the deadline is a hard date like the August recess. The market freezes. Capital stops moving because risk cannot be accurately calculated.
And you can see this exhaustion playing out perfectly on the charts, especially for everyday retail investors.
Oh, absolutely.
If politicians are fighting over ethics, you'd think the market would just ignore it and focus on the tech. But the blockchain data shows the exact opposite. Everyday investors are fleeing.
They are completely tapped out.
The data we have shows how this legislative delay is draining the people holding the asset. Currently, XRP is hovering in that $1.05 to $1.26 range, and retail interest is virtually dead.
Yeah, the search metrics are terrible.
Google Trends search volume for the term XRP has collapsed by 91% since that 2025 all-time high of $3.65.
And the on-chain metrics validate that lack of interest entirely. Daily active addresses, the actual unique users transacting on the ledger, have dropped from 6,600 down to roughly 2,200.
Wow, so a huge drop in actual usage.
Yeah, the retail crowd that piled in during the excitement of the SEC settlement has largely walked away because the promised institutional explosion hasn't happened yet. They expected an immediate engine, but they only got a shield.
And there's another structural factor constantly pushing down on the price that we have to explain. The escrow. Every month, Ripple releases a massive amount of XRP into the market.
Right. The escrow is a fundamental piece of XRP's tokenomics. Ripple has a mathematically locked escrow system that automatically releases 1 billion XRP on the first day of every month.
A billion. That's huge.
Yeah. Recently, that release was valued at over $1.33 billion in a single month. Now, Ripple doesn't sell all of it. They typically return a large portion of it back into a new escrow contract. But the sheer potential of that overhang is a massive, recurring structural headwind.
Let's break that down. If over $1 billion of potential new supply is entering the market every single month, that supply must continually be absorbed by fresh demand just to keep the price flat.
Exactly. It needs constant buying pressure.
So if retail isn't buying because they are bored and exhausted by the political gridlock, that absorption becomes mathematically very difficult. The price bleeds out.
But, and this is key, the blockchain data shows that while retail is exhausted, someone else is buying. Institutional smart money is quietly accumulating.
Oh, really? Through the ETFs?
Yes. Spot XRP ETFs from providers like Canary, Bitwise, and 21 Shares launched in late 2025. A spot ETF means a regulated fund buys the actual XRP and holds it in a secure vault, allowing institutions to buy shares in the fund without having to deal with the custody or legal headaches of holding the token themselves.
And these ETFs are seeing massive volume. Our sources note over $1.47 billion in net inflows within their first 60 days. In fact, they recently noted 8 straight weeks of positive inflows.
If we connect this to the bigger picture, we are witnessing a massive divergence in market behavior. You have retail traders who are bored, selling off, or simply ignoring the asset due to the lack of immediate legislative news and the constant pressure of the escrow.
While the big players are loading up.
Exactly. On the institutional side, capital is slowly, methodically accumulating positions through these regulated ETFs. They are patiently waiting for the Clarity Act to eventually pass, absorbing that supply while retail looks the other way.
It's like a massive state-of-the-art highway system that retail drivers have completely abandoned because the toll booths aren't open yet.
That's a perfect analogy.
Right. I mean, they got tired of waiting in traffic, so they took the local roads. But meanwhile, massive shipping corporations are quietly buying up all the cheap real estate next to the highway exits, knowing exactly what's going to happen when those booths finally open.
Yeah, they see the writing on the wall.
They don't care if it takes another month or another year. They are just securing their position.
The institutions are positioning themselves for a regulatory event that they view as an inevitability. They are operating on a multi-year horizon, completely unbothered by the daily price fluctuations or the political drama surrounding the August recess.
So what does this all mean? Let's bring this all together for you listening. XRP survived a near-death legal experience. It fought the SEC and achieved regulatory clarity in the courts, proving its retail sales are not securities.
But its transition from a speculative crypto token to a fully integrated institutional settlement asset is currently bottlenecked by the Clarity Act.
And that specific act is currently stuck in partisan gridlock over political ethics and disclosure rules.
For anyone trying to gauge where this asset is going, the traditional metrics are currently broken. Monitoring the Senate floor calendar, tracking the vote counts, and watching the August recess deadline is a far more accurate indicator for XRP's immediate future than any technical analysis on a chart.
It's all about Capitol Hill now.
Exactly. The fundamental tech is ready, the ETFs are quietly accumulating, but the overall market structure will remain frozen until Washington acts.
And that brings us to a final, slightly provocative thought to leave you with, based on all these sources. Let's say the Clarity Act passes. The gridlock breaks, the bill is signed, and institutions finally get the ultimate green light to use XRP for fast, cross-border settlements.
Okay.
What happens if those banks just decide to use stablecoins like USDC or USDT instead?
Wow. Yeah, it is the existential question for the entire network.
If the entire purpose of XRP is moving value efficiently across borders, will banks actually want to hold and transfer an asset that has a 2.93% daily volatility rate?
It's a huge risk for them.
Right. Why would a major financial institution take that price risk when they can use a stablecoin that never fluctuates from $1? Does the Clarity Act, this massive legislative victory that everyone is waiting for, arrive just in time for XRP to find out it's been functionally replaced by stablecoins?
That would be a brutal twist of fate.
The comeback story might finally make it out of the regulatory waiting room, only to find the hospital itself has moved on to a different cure. It's something for you to definitely keep an eye on.